Hey everyone, it's Daniel here from Infovest. Hope you're all doing well. Want to talk about this article here, and I'll leave the link in the description for you to read up on this. But basically, the article says Tesla price cuts accelerate the EV market's first real recession stress test. So pretty interesting. There's a couple of points here that that this article makes that I want to talk about. First things first, you see the EV industry, the EV, a lot of the EV stocks, like for example, Rivian, Fisker, Lucid, a lot of these mid-tier that are new to the industry, kind of like startups. A lot of them have seen their price really reverse from all-time highs, and a lot of the stocks really plummeted and just completely crashed, right? And then you look at a stock like Tesla as an example, who just recently announced this price cut, and announced that they're having this price cut because demand is weak and the expectation of the future that we could see lower demand. Higher interest rates is also affecting the demand as well, right? People have less cash, less money, and higher rates are also definitely going to affect a lot of the automaker companies out there that rely on debt or having some sort of money that is being financed. And if you're not getting enough of cash flow into your business, then you could see where the troubles could arise. So already a lot of these EV stocks, like I mentioned, Rivian, Fisker, Lucid, have completely plummeted. When you look at Tesla, Tesla has also dropped quite significantly, about 65% drop. And with the news with Tesla coming out with the price cut, just basically goes to show that this is the beginning of what more pain could look like for Tesla, or maybe many of these other EV stocks, right? You think this could be the bottom right now, and maybe it could be, right? We don't know. Nobody has a crystal ball, but definitely, if things persist or you do get a hard landing, not a soft landing, the narrative that a lot of people are talking about, right? Definitely, you could see a lot of these EV companies, EV stocks, end up being in trouble. Now, this article with its title is very interesting because it says that, you know, Tesla price cuts accelerate the EV market's first real recession stress test. And, when you look at Tesla, take out 2020. I wouldn't really consider that a real recession. That was a more self-induced recession that was created by the governments, and very quickly things turned around for a lot of these, for the economy and for the markets as a whole. So I would rule that out. But when you look at Tesla, right, and a lot of these EV companies as well, they haven't really seen a true recession, a 2008 style recession, a 2001 style kind of recession. And even though this article talks about that, if a recession is coming in, the truth of the matter is we are in a recession. That's why you are getting these price cuts from Tesla. And the fact that we are in a recession, and the fact that some layoffs have started but not have completely exacerbated, is because a lot of these companies are trying to see and don't want to jump the gun by cutting and laying off a lot of workers all of a sudden, because if they're wrong about the recession, and sure, yes, the recession is not as bad as what they anticipated, then they have to go back and do all these hirings, and it will put them in a worse off situation, right? So a lot of these companies are waiting for more kind of confirmation before having these layoffs, or increasing their layoffs throughout the year. But this article is so interesting because the title itself basically says that the first real recession is going to be a stress test to really see and realize if these companies can withhold and can withstand a true recession, right? And it compares with 2001. In 2001, right, if I scroll down in this article, it says Tesla's 2023 world is like Amazon and eBay in 2000, right? A recession, if it happens, so this is the article, I'm just going to quote it here. A recession, if it happens, doesn't necessarily mean EV sales will fall. Most models saw big sales gains last year in both US and China. It's more of a question whether EV companies will grow fast enough to keep adding jobs for companies beyond Tesla to turn profitable when investors expect them to, or before they run out of cash they raised to fund startup losses, right? So even if they're still making sales and they're growing, it's the expectation that if they're not growing as rapidly as expected, you could still get the stock price to sell off if they're not meeting the expectation of the market. Now, the next paragraph says that sets up a dynamic a lot like the one confronted .com companies like Amazon and eBay as 2000 blended into 2001. A web sell-off was well underway then, and just as EV companies like Tesla, Fisker, Lucid fell sharply last year, 65% for Tesla, 54% for Fisker, 82% drop for Lucid, then as now, weaker players like today, EV makers, were scrambling to avoid running out of cash as economic slowdown loomed, either by cutting costs or raising more money from investors. So, in and as I scroll down more through this article, it says, but at the same time, revenue at .com companies kept rising fast. The businesses that were destined to survive began to turn profitable between 2001 and 2003. Today, EV sales in China are rising even as COVID continues to hamper its economy, and EVs posted 52% sales gain in the US at year end. EVs had 6% of the US light vehicle market compared to 1% of the US retail sales being online in late 2000. So basically, what they're saying here is that just like the .com bubble, right? You had a lot of these internet stocks that sold off, and you had the index that sold off about, I think it was 80%, and a lot of these stocks dropped 80-90%, and these big names like Amazon and eBay dropped by a lot as well. And they're saying that this was the .com, the internet company's true recession, and that stress test basically showed who were the ones that ended up going into bankruptcy and never being revived again, and who were the ones who were resilient and were able to pick back up. As you see, Amazon, eBay, a lot of these other tech stocks that after 2001, 2002, 2003, it's been nothing but an uprise from that point of view, right? So could we see the same thing with a lot of these EV stocks? And I think that's very likely. You could see Tesla, you could see maybe Rivian or some other EV company continue to plunge. You might see maybe an 80 or 90% drop in Tesla's price if this happens to be a very strong recession, an ugly recession. And then once everything has been bottomed out and the companies that were unable to survive, they basically go bankrupt. And the ones that are resilient, you'll probably see a pick back up as the conditions of tightening, quantitative tightening moves to quantitative easing, and more easing conditions come in, lower rates, rate hikes, and people start to pick up these stocks all over again. So sure, you could see Tesla move back higher, maybe even way above its all-time highs last year, right? So it wouldn't be a surprise for me to see that in the EV space, especially like if we've seen back in the .com bubble, how many of these stocks bursted 90%, but then if you look down the road, right, if you picked up Amazon for like $5 or $8 or $10, you'd be laughing because the stock price went up to all the way to 3,000, right? This was pre-split. Right now, with the split, it's obviously a different price. Now, same thing with Tesla. You could see Tesla, maybe, I'm just saying maybe, the price dropping 80, 90% in this recession or this stress test, especially as people start to maybe panic out of their trades, start to expect that, okay, really things are getting worse off. There's no way people are going to go out and finance and get funding to buy a car. They wouldn't even be thinking about that. They would be more thinking about items that they need, that are more important. They're essentials. Rather than buying a Tesla car. And you could see, people really hammer the stock even more. And then once the tide has gone, right? Like Warren Buffett has said, once the tide comes in and it goes away, you'll get to see which are the companies that are swimming naked, which are the people who are swimming naked, and the ones that end up going bust, and the ones that will continue to be resilient. And if it's Tesla, then great. Tesla will then eventually pick back up again, and a lot of these tech stocks will pick back up again. But this whole EV bubble, right? This whole EV narrative that in 2020 and 2021 we saw the markets really and traders go after a lot of these EV stocks, and these EV stocks really performed massively well during those times. Definitely you could call that the bubble has bursted after that, and a lot of these stocks sold off. And again, we could see lower prices, just like what we've seen previously in past histories with the dot-com bubble. And this would be kind of the moment for the EV industry also seeing massive price reduction in their stock price, in their share price, and then eventually finally finding a ground till another new startup or tech kind of bubble is created for maybe another industry, right? So I think this bubble of the EV stocks has already bursted, and that now it can in the future moderate, especially as the sales and the profits for Tesla and many other EV companies may also start to moderate, in that high level of high expectation where the sales are growing rapidly, and the market share that Tesla is taking over is growing rapidly. I think that era will start to basically die out and moderate more as these companies start to mature. The same way the dot-com internet companies did back in 1990s, back in 1999, and then the bubble happened in 2000, bursted, and then 2001 and onwards, right? These companies start to mature. So I can see the same thing with these EV companies. And I think money will now start to flow into a different area, different industry, and a lot of these stocks will start to bubble up. And that industry could be maybe, hey, what we're seeing already with the news of Microsoft buying, investing 10 billion into the open AI chat. I think it's GBT. I don't know the acronym, but you could see probably AI stocks end up being the next future bubble down the road, just like with dot-com, just like with the EV stocks, and so on. So pretty interesting article. Take a look. I'll put it in the description again for you to read up on it, and let me know what you guys think. Leave a comment below, subscribe, hit the like button as well, and the bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.